Good evening, everyone. Anubhav, Almas, Vishal, Soumya, Ishan. Very good evening to one and all. I'm sure now you are in much better condition emotionally. Now your pain would have subdued and you would be feeling more empowered as far as this topic is concerned. Yes, Pragya, Priyanshi, very good evening. So tell me, how was your post first session understanding of this topic, whatever you studied, whatever you again revisited the module, anything, or still if there is any pain area, let us start with that so that I'll be focusing more on those lines and we can take it in that particular fashion, addressing your pain areas. Tell me. If flat was acquired or constructed this year, say 20th May, and MV or FV given in per annum. Okay. So Asta is asking a question. Sir, please tell if flat was acquired or constructed this year, say 20th May, and municipal value fair value given is per annum, then that will be bifurcated. Yes. Yes. What if I'm understanding your question correctly? The answer is yes. Because you are saying it was constructed in this year itself, so it has to be bifurcated, proportionated, I'll say. Yes, but Aishan, when I'll start with the revision only, so don't worry for that. Yes, Anubhav, correct. So, students, should we start? I couldn't attend half of the last class. Will I understand? Priya, yes, but then you should have also gone through the recording, beta. That would have definitely added more understanding and it would have helped you even more. Anyways, don't worry. You will understand. The only thing is that you will have to be attentive throughout, and whatever are your difficulties, you have to put it across immediately. Okay. So let me start, students. So we were discussing the topic from Income Tax Act. The topic is profits and gains of business and profession, also called as PGBP. Now in PGBP, the format that we are using for computing the PGBP head income is a reconciliation format. Generally, this sum is part of the comprehensive sum. Comprehensive is where you are required to compute the entire total income, maybe along with the tax liability, maybe under both the schemes parallelly. And generally it starts or it has in the question majorly the trading P&L account given, or at times you are given the net profit as per trading P&L account and additional information, the other data. Students, is my voice coming clearly or is there some problem with my clear? Okay. Because somewhere my screen is, I feel it is getting stuck. Priya, I also thought it is slightly lagging because when I'm speaking, I cannot see it going. Now I think it is going smoothly. Sorry, there is network issue at my end. Okay, perfect. Okay. So students, I was saying that in this comprehensive sum, you would be given a trading P&L account or the net profit as per trading P&L and the details. What you should first understand is that this question will lead to computation of total income, which is headwise, but our accounting, our P&L is never headwise. So our first role is, if you remember, I had used the word segregation. You should learn or you should understand how to segregate. And it is not at all difficult. You will be able to do this simply by focusing on the names of the expenses, the names of the incomes given. And majorly, we will be well versed by the end of this subject as to what falls under HP, what falls under other sources. So your first step is segregating. Now, when you are segregating and you are doing computation of your total income, we all know it has to be done headwise. So you will also prepare working notes for each heads. Now, for all other heads like HP, CG, even other sources, your working is very structured, very rigid. I will use the word very particular. Only those items would be falling there, right? So whatever items you find from your trading P&L, which is dealing with some other head's income or some other head's expense, you have to take it from here and put it in the respective workings of the respective heads. Now, when we are doing this, when we come to the computation of PGBP head, that is this head, you have to remember that we will be following a reconciliation approach whereby our starting point is net profit as per your accounting P&L, whatever it is given in the sum, and we will be adding and subtracting certain things to reach to the PGBP income. Fine. Now, when we have to reach from net profit of accounts to PGBP head income, we have to understand and appreciate certain points. What is that? Let us say the net profit given in the sum is 3 lakhs. Please recall what you did in standard 11. In standard 11, when you studied for the first time how to draw a P&L and how to draw a balance sheet, what we used to do is we were given a trial balance along with certain adjustment entries, and we used to start putting the figures on the debit and credit side of trading P&L as per our knowledge and understanding, and also on the respective assets and liability side of the balance sheet. And then on the calculator, you added all the credit items of P&L. On the same calculator, you subtracted all the debit items of the P&L, and that led to this balancing figure. Now, after getting this balancing figure, when you showed this to your teacher, the teacher checked and said, see, these two figures which you have taken in the P&L credit is wrong. It should not come in the P&L credit. Let us say these three figures which you have taken on P&L debit side is wrong. It should not come on P&L debit side. Now, teacher says, okay, do one thing, immediately rectify this and tell me what is the correct profit. So what we used to do, we used to simply strike out this three figures in the P&L. And on the calci, what I used to do, I am already having this figure on my calculator as the balancing figure. To derive the correct profit, I used to simply do what? I used to undo. I used to reverse what I did. What reverse I did? I had added these figures originally to derive the profit. Now I will be subtracting them. Similarly, I had subtracted these values. Now I will be adding them. This is what I used to do simply, and this profit used to get corrected. Same logic is the reconciliation logic for deriving the PGBP income. What is this logic? I start with the net profit as per my P&L. Now there would be certain items, pay attention, which are already debited in the P&L. But my teacher said, Vishal, you're wrong. These things will not come in the P&L debit side. Correct it. So what I did, I just showed you. Since while computing the net profit, I had subtracted those items, now I will add back. So the same logic we follow over here. Now, when we are going to study the PGBP provisions, you will understand what comes in PGBP P&L, what does not comes in PGBP P&L. So something will try to do like this. We'll try to figure out what will come in a PGBP P&L by understanding the provisions. That also we started last lecture. So you'll get to know, okay, these are the items that should come in the P&L credit side and debit side as per the PGBP provisions. Now, if these three items should come, but your accounting P&L has total 5 items, it means the accounting P&L has 2 extra items which do not come in P&L. Similarly, these items should come in P&L, but your accounting P&L has 3 more items which are debited, which according to PGP provisions should not come in the PGP P&L. Now, what you will do is these 3 items of debit, these 2 items of credit. See, 2 items of credit, 3 items of debit, which according to you should not come in PGP P&L, but they are part of accounting P&L. What you have to do is you have to give the reverse effect. What is that reverse effect? Those 3 items which are already debited to P&L, but are not allowed as deduction in the PGBP, you will add it. Similarly, what you will subtract? Those amounts, those 2 amounts in my example, which are already credited to the P&L, but are not taxable under this head because they are taxable under some other heads like house property head, other sources head, capital head, but they are not taxed under the PGP head. But as per accounts, it is also finding place in the P&L credit. I will undo the effect by subtracting. So the first thing that we do is we have to undo what is there in the P&L. So simply on the credit side, whatever is there in P&L but not part of PGBP credit side, you will subtract it. What is there on the debit side of P&L but not part of PGBP debit side, that is PGBP provisions do not consider it as an expense, do not allow you deduction of that expense while computing the PGBP income, you will add it. Similarly, there is a possibility that in this accounting P&L, you have not considered one item. Let me call it as Y. This item is not there in accounting P&L, but as per PGBP provisions, it should come in the PGBP credit. That is, it should be a PGBP income, but it is not there in accounting P&L. What you will do? Same thing what I used to do while correcting my 11th standard trading P&L. Let us say when teacher checked my sum, she identified 2 types of mistake. One, I have written some excess data. I already adjusted that. And 2, I missed out some required data. Like she identified ki Vishal, you have not written this one item. It should also come in the P&L credit. I said, okay, ma'am, I'll do it. So immediately I'll write down the item. I'll put the value. And what I used to do is whatever net profit was there on my calculator, I will simply add this amount in that. So what I did was incomes which are taxable under the head PGBP, but are not already in the accounting P&L. So accounting P&L has not created it. Why? Because accounting has different principles, different logics, different calculations. So as per them, it is not their income, at least of this year. But as per our PGBP provisions, this is your income of this particular financial year, this particular assessment year, this particular previous year. So in order to give effect over here, I will add that item. So please understand what adjustments will come in add, what adjustment will come in less. And it is purely logic. Purely logic. But until that logic gets sublimed inside you, it gets percolated inside you, what you can do is you can learn these rules. Similarly, my teacher said, Vishal, you have missed these few items which should be there on the debit side of P&L. I said, okay, ma'am, I'll write it. So I used to write it immediately. And again, what I used to do is in my profit and loss, which was there on my calculator, I used to simply subtract those 2 values. So what I did is expenses which are deductible under PGP, that is PGP provision says you should subtract this. It is a PGP expense, but for some reason it is not debited in P&L. What you should do is you should subtract it now. And by doing these 4 types of adjustments from the accounting net profit figure, you reach the PGBP value. Anybody, any doubts with this point of reconciliation or the PGBP format? First, tell me that before I can proceed. Students, any doubts with the format first? Because everything revolves around the format. Good. Others, I only have few names getting repeated on my screen. What about others? Smriti, others. Where are others? Okay, still repeated names. Priyanshi, Soumya, Anurag, Janvi. Okay, Astha. Yes, others. Let me feel you all are present, listening to me, and most important, understanding, correlating. Uh, Shalini is there. Rehana, Avi, Nash. Okay, new name. Divya. Okay, Varsha. Good. Almas. ठीक है. That's it.
Good evening, Vishal
Good.
sir.
Very good evening, Aparna ma'am. How are you, ma'am?
Yeah. Sorry to disturb you. I know it's a
Not at
very
all.
important topic going on, and students are learning this PGBP. It's one of the very important topic. But in between, I am interrupted just to inform you, students, that since we all have a fear to face the examination, we find it we need motivation. On time basis, we need motivation from person. So I want to announce you one of the important programs which ICAI BUS is going to organize on 25th of April, where the President ICAI, Vice President ICAI, the BUS Chairman, the Vice Chairman of BUS are going to meet you one-to-one to guide you how to face the CA exams with confidence, right? So please, you all should join that program. That is Charcha Ka Vishay CA Pariksha. Yeah, the name of the that session is going to be Charcha Ka Vishay CA Pariksha. So these leaders of the ICI are going to guide you. One-to-one interaction would be there. So please join that program, which is going to be organized on 25th of April at 3 p.m. to 4 p.m. Audit class, it's 3 p.m. to 4 p.m. on Sunday. I don't think it's on Sunday there would be any class on that day when chat is coming. So please join that program. I want to run a video also to have that effect what the program would be. So may I share that video with you? Technical team, can I share that video?
Yes, I cannot hear the sound.
Is it audible?
No, ma'am.
Is it not? No. I have to see. Just a minute.
Ma'am, 1 second. I think there is something in the settings that I need to do. You don't remember what is that settings? Anybody knows what is that setting? Yes. Ma'am, I think you'll have to do it at your end.
Yeah. You just tell me. I have to select something. Yeah. Okay. Share sound. Right. Got it. Yeah. Basically, this is a pre-discussion on the examination and CA exams sometimes. So it's a distance learning, and we keep on fearing how to appear the exams, how to score these marks, how to prepare. So these are the something President ICI, the Vice President ICI will be coming to meet you. So students, please join this program at on 25th of April at 3 p.m. to 4 p.m. 25th of April. It is 25th of April. You are saying your.
Ma'am, but it is not Sunday, na? You said Sunday. I think 25th is Friday.
Just a minute. Yeah. I think.
So we need to check that also. If it is 25th, it has to be Friday.
Just a minute, huh? Just a minute. Okay, it's 25th April. You are saying your classes of audit is there. Yeah, it's being mixing with that. I will discuss. I will let you know in short time during the session. Also, I will again join you that how you can join that session also, right? So I will again come to you and again will be telling you how you can join this because you are saying you are having auditing classes and all. So definitely I will come with a solution again. Yeah. Yes, sir. Then I think you can continue your class. Yeah.
Thank you, ma'am. Students, in a minute, I'll just start. Okay, students. So I just spoke to ma'am. She will get back to us with the details in maybe during this session itself or within a day. So yes, I know there is a class. So that is what we just spoke and it will be adjusted. Sir, if both regime in question we were to calculate it, will so lengthy, how we manage time in exams? Okay, good question. Prakash Bhai. So Bhai, don't worry Bhai. There will be no problem at all Bhai. Because even if both approaches are required, let me tell you, once you solve it by one approach, let us say by the old regime, you solve it. Normally, we solve it firstly by the old regime when both are asked. And then from old to new, you have to only remove certain adjustments or certain deductions. So maybe by spending only extra 2 to 3 minutes, the sum gets converted from your one category to another. So you'll first solve the entire sum by the old regime, and then you will simply copy paste the computation wala part by only making changes for those adjustments. So don't worry, it should not be a very big problem or it should not be a very time consuming affair. Okay, Prakash bhai? Okay. So students, I hope you understood this formatting part. Now, once you have understood this formatting part, what we are going to study henceforth is PGBP provisions, which will help you understand what should come on the PGBP credit side. That is what should be considered as PGBP income, what should be taxable under the head PGBP, and what should come on the debit side of PGBP. That is what we call as what will be allowed as deduction under the head PGBP. So now when we are going to study the provisions of this chapter, by the provisions, you need to figure out, okay, these all things will be PGP income. That is, you should visualize it. It is part of PGBP P&L credit side. And when we talk about expenses, all these expenses are PGBP deductions. That is, PGBP head consider it as expense and allows you a deduction. Fine. Now, to understand the provisions, let me take you to the sheet. I've already shared this last time. Now, if I talk about the credit side as to what comes on the credit side of PGBP, broadly, there are 3 sections dealing with this. The third one is more theoretical. I'll consider that in the next session. Let us first focus on the practical aspect, because from practical to theory, when you go, it is more easy to correlate and remember things. Now, section 28 says what? It simply says that whatever are your revenues arising from your business or the profession. Now, when I say revenue arising from business or profession, it may be directly arising or indirectly arising. Like, directly is what? If I'm in the business of goods, it is the sales value of the goods. So it is a direct revenue. If I'm the business of service, then whatever fees, whatever charges, whatever rent, whatever fare, whatever I'm getting, that is my direct revenue. What is my indirect revenue? Again, same example, if I'm in the business of goods and I'm exporting the goods, then there are many government incentives in the form of duty drawback, cash assistance, profit on sale of import license. All these things becomes my indirect revenue. Correct? So direct, indirect revenue basically are the one which are arising from the performance of my business. So by running my business, by doing my business, whatever revenue I get, that will be section 28 revenue. What is section 41? Please remember, students, section 41 is not any revenue as such. Then what is 41? I will say 41 is a contra entry. What is this contra entry? Basically, 41 is what? If in some earlier period, you had shown some loss, you have shown some expense. So this was already debited by you. In our language of PGBP, it was already allowed as deduction in the earlier years. If this amount of loss, which you have already shown as a loss or expense, that is, you have taken a deduction of that, if this amount is reimbursed, if this amount is recovered, if this amount is given back to you, so if you are able to recover, reimburse, or get this amount refunded, then we have to pass a contra entry. Understand the logic. Because in the earlier period, when this particular loss had happened, you had shown it as a debit of P&L. Now, if that loss is given back to you, obviously you have to give a contra effect. So you are showing it as a credit item. So in this section 41 point, what will be considered as your PGBP income is those expenses or losses which you have already claimed as deduction in PGBP in your earlier years. If that loss is refunded back to you, it is repaid back to you, you are reimbursed that amount. That is what is section 41 PGBP income. Okay, beta, sorry. So Tej, yeah, Priya is asking whatever is in monetary form is direct. See, Priya, again, that is a misunderstanding. I may receive my fees in non-monetary form, still it is direct. See, difference between direct and indirect is whatever I get by performing my business. What is my main line of business? So in case of sale of goods, the sale value, I may receive that also non-monetary form. I may receive my professional fees in non-monetary form, still it remains direct. Indirect is where I am not actually dealing in that thing. But because as I said, my main business is exporting goods. So export price, what I get is direct. But because of that main business of export, I'm getting some incidental revenue arising from export. That is where I'm calling it as indirect. It has nothing to do with monetary or non-monetary. Fine. Now, having understood the credit side, let us understand what all expenses are allowed as deduction while computing PGBP income. Now, there are multiple sections where you are given so many names of expenses. In fact, there is one residuary section, section 37, where no name is given. So any expense can be covered in that. Now, when you have so many sections, how to remember and how to apply it in exams as to what expense will come in PGBP, what expense will not come in PGBP. This is bare language. I'll give you technical language. What expenses are allowed as deduction in PGBP, what are not allowed as deduction. How will you identify? So what I have done is I've broken the provisions into two parts. First is what I name them as golden rules with exceptions. Second is restrictions and disallowances. What is golden rules and exceptions? When you read all the sections from 30 to 37, it appears to be 6-7 sections. It is more than 35 sections where they are trying to give you certain conditions that if you fulfill these conditions, then that expense will be allowed to you as deduction in PGBP. In simple words, you can take that expense in PGBP P&L debit side. Now, what I have done is instead of reading so many 35 plus sections, I have summarized the main conditions of these sections, whereby when you summarize the conditions, you find that only 4 conditions are given in all the sections. In other words, when any expenditure fulfills these 4 conditions, that expenditure is considered as an expenditure of PGBP. It will be allowed as deduction. If that expenditure is not fulfilling even one condition, then there is a problem. So when you read all these sections, you find that there are common conditions. And when a particular expense is satisfying these conditions, it becomes an eligible expense. It becomes an expense which is allowed as deduction. Now, what are golden rules? These 4 conditions, I am calling them as golden rules because these are the rules or conditions which will ensure that you get that expenditure in PGBP. What is exception? For some expenses, the Act has relaxed 1, 2, or more of these conditions. So, for some expenses, the Act says, okay, instead of 4, you satisfy only 2, remaining 2 are exception. For some expense, the Act is saying, okay, out of 4, you satisfy 3, 1 is exception. So that is what is exception. Exception means you need not satisfy that condition. Still, you are allowed deduction. So what are those 4 conditions? Let us understand. And let me tell you, there is, even though I'm using the terminology like golden rule, etc., nothing is technical, all is simple, plain logic. So now we are trying to understand what will come in the PGBP debit side. That is, what are the expenses which the PGBP will allow you to deduct it while computing PGBP income. Condition 1, any expense can be allowed as deduction. What condition it should satisfy? It should be my business expense. In other words, it should not be personal. In other words, it should not be related to any other head. Logical. See, if it is related to any other head, we already discussed at the start in the format that you have to put it in that head's computation, not in PGBP. So the first requirement for any expense to be considered in PGBP is it should be a business expense related to business. Second condition, it should be revenue in nature, whereby we are not allowed to take capital expenses. And again, this is obvious. Why? Because PGBP is a revenue head, means it is a head which is taxing you a revenue income. So obviously the expense also that you should consider is only revenue expense and not capital. Third, now we know that income is computed every year. Now when income is computed every year, it is important that you consider the income and the expense of one particular year only in that computation. In other words, I cannot consider an expense relating to a future year. Let us say today I'm doing computation of the financial year 24-25. Like today, all companies, all businesses are preparing or finalizing their accounts for the year which has just concluded, that is financial year 24-25. But at the same time, the next financial year has started, that is 25-26. Now, when I am preparing my final accounts, I should, even in accounts and even in income tax, I should only take those incomes and expenses which are related to the year 24-25. only then I will get the correct income or profit of 24-25. If I am taking any expense which is of the next future year, like 25-26, 26-27, in 24-25. For example, very simply, while preparing the P&L of 24-25, I am considering the salary rent of 25-26 also. Is it logically correct? Answer is no. That is what is this third condition, that I should only take the expense of that particular year for which the computation is going on. That is what I am using the word current year, by which I mean you should not take future year's expenses, nor you should take past year's expenses. You should only take that current year's expense. And then the fourth condition is that whatever expense you are taking should be legal expense. That is, it should not be anything which is forbidden by law, which is doing that activity is an offense under any law. That will not be allowed, because obviously no law can allow you to do anything which is illegal or forbidden under any other law. In that particular case, your law will be overriding the other law, which is not permissible. So simply, the condition 4 is very simple and straightforward. You should only consider legal expenses. Illegal expenses are not allowed as deduction. Now, these are the 4 basic conditions. Now, let me tell you what are the exceptions. Exceptions means where that expenses will be allowed as deduction even though it is not fulfilling this condition. Now, you'll also interestingly find that these exceptions are repeating. So more or less the same exceptions are repeating in all the conditions or majority of the conditions. Like first, so we are discussing that the condition is my expenses should be related to the business. It should be a business expense. Now, what is exception? That some expenses which are not business expense are also allowed as deduction. First, family planning. This is allowed only if the assessee is a company. So if you're doing computation of individual partnership from HF, this is not allowed. If you're doing of a company, it is allowed. Second, expenses incurred on research and development, which is over here termed as scientific research. Most importantly, this research is done by an outside agency, and that agency is approved. Either it may be called as a scientific research association or a college or a university or any scientific research organization or a national laboratory, whatever it may be called. Just remember this keyword. They should say that it is approved. If it is approved, you get deduction of the amount which you have paid, even though the research what this agency is doing has nothing to do with your business. So the research may be not at all related to your business, but understand this is something for national cause. So since these are promoting a national cause, the law says you can take deduction even though it is not related to your business. Now here, for this expense, scientific research payment outside, you have to remember this expense will not be allowed when you are in the default regime, that is the new scheme. It will be allowed only when you are in the old scheme. For other expenses where nothing is mentioned, they are allowed under both the schemes. Third exception to this rule is whenever donations are given, what you should focus on is what is further given about donation. So where the P&L simply says donation, it is completely disallowed. That is PGP will not give you any deduction. Where it further says donation under any of these sections. Now, these are all sections of income tax. Now, where the section of income tax is given, then a question will come whether I should get this deduction. Answer is no. These are again not allowed as deduction under PGB. Then somebody will answer, then why these sections are given? Because these are deductions, but they are deduction under some other chapter, that is chapter 6A of the Income Tax Act, which is called as deductions from gross total income. So only when you are given donations under 35, any section, 35 A, B, C, D, anything, then only it will be allowed as deduction. Other than donation under 35, if anything is given, it will not be allowed as deduction. Again, somebody wants to know the logic, so I have taken the names of 2 prominent donations which are covered in 35. One is for doing research and extension in agricultural sector and promoting skill development in India. Now, again, we all know that these are all related to the national causes. That is why. Now, the second condition was that these expenses should not be capital in nature. If it is capital, we will not allow as deduction. However, family planning, if you have incurred revenue, anyways, it is allowed. Again, remember, you have to keep in mind that whatever we are talking about is applicable only to company SSA. Fine. So, family planning, if it is revenue, it is allowed to company. If it is capital, it is still allowed. That is the most important point. So we are defeating our own condition. That is why this is an exception. So capital expenses on family planning are allowed. The only thing is they have said that apportion it over 5 years. So you take it 1/5 every year for next 5 years. Similarly, if you are doing the research yourself, so in our point, the research was done by some outside agency, you are giving them contribution. Here, you have set up your own laboratory, your own research facility, and you are doing in-house research. In such a case, firstly, it should be related to business because this is not an exception of the first point. So it should be related to business. The only thing is here, capital expenditure on scientific is allowed. So when you are doing in-house research, the research is related to your business, then even capital expenses on scientific research are allowed. Revenue is anyways allowed, even capital allowed. Similarly, if you are engaged in some special businesses, we are going to read the names of these businesses under this section. It is only a list. So nothing more to keep in mind as of now. Just remember this section number. So where the expense is covered under section 35 AD, sorry, not expense, the business, then capital expenses for such a business is also allowed as deduction. So in 3 cases, capital expenses are allowed. One is for in-house scientific research related to business, family planning capital expenses by company, and capital expenses which are for running some specified businesses, names of which we study in 35. See, all this we did in the previous class, so I'm just brushing it up for everybody's clarity. Then the next is the expenses should pertain to this year. The year of your computation, which in your exams would be the previous year, 24-25. So it means that if any expense is not pertaining to 24-25, you will not get deduction in this computation, you'll get deduction in that particular year. So we are doing computation of the previous year 24-25. So all expenses should be pertaining to 24-25 only. This is the golden rule. Now the exception. First, only in one case you can claim deduction of a future year expense. Now, what is this future year expense? It is the gratuity. So if my employee retires, at the time of retirement, I have to pay gratuity. Now the employees are going to retire in future in some years. Somebody is going to retire in 30, somebody is going to retire in 31, 32, 33, any of these years. But account says you make a provision for gratuity. Income tax says if you satisfy the conditions which we are going to study today later under section 40A subsection 7, then you will be allowed deduction for the gratuity which you are going to pay in future. So today it is not your expense. It will be expense of the year in which the employee retires. But if you satisfy my conditions of 40A7, I will give you deduction today of that gratuity provision. So this is our first exception where a future year expense is allowed as deduction in the current. Then family planning, you remember 1/5 capital expenses. Now you have purchased capital asset 2 years back. So it is a past expense, but because of that 1/5 rule, I'm allowing you even in the current year. So now this is example of all those cases where expense was done in past, but I'm allowing it to you in the current year. Similarly, the scientific research where you are doing it yourself and you have done it even before commencement of business. How much before? Up to 3 years before commencement of business. I will allow you that deduction in the year in which you start the business. So again, in the first year of business, you are allowed to claim expense of past 3 years which are done for scientific research. Similarly, besides the preliminary on scientific research, you also have the preliminary which is generally incurred by everyone. So those expenses are also allowed. It is covered in section 35D. Similarly, where a company is formed by amalgamation demerger, the expenses incurred for doing amalgamation demerger, that is also a type of preliminary allowed under section 35DD. And where you have a VRS scheme for your employees and you are giving a lump sum compensation to them, asking them to leave the organization voluntarily, this VRS compensation. Now, all these expenses are allowed over a span of 5 years. So you may have incurred expense in 1 year, but it will be allowed 1/5 over 5 years. So again, this is an example where past period expense get allowed in the current year. Similarly, the preliminary expenses pertains to mining business. So those who are in mining business, they are allowed deduction of their preliminary expenses, which are spread over 10 years. So it is allowed 1/10 spread over 10 years. These two I'll explain today later once we come to those respective sections. And then the last condition is that the expense should be a legal expense. It should not be incurred for any purpose which is prohibited, which is forbidden by any other law. Examples of this which will not be allowed because of this rule is bribe is paid to get some contract, or you have some connections with the underworld people where again you are paying them money to help you grow your business, or there are some penalties. Now, most important, penalties may also be allowed. That is where you have to understand the distinction. Where the penalties are done, are paid for any activity which is an offense, it will not be allowed. But where the penalties are paid in the normal course of business, because see, while doing business, there can be some plus minus, you may have done something wrong. That is not a problem. It is allowed. See, you have to understand the difference between an offense and a mistake. So while doing business, if there is some act which is not correct, but it is not an offense. Like, I'll give you a simple example. You are driving your vehicle on the wrong side of the road. It is wrong. But whether the RTO authorities can put you in jail for that, answer is no, because it is not put in the category of offense. It is not something which will be categorized as illegal or forbidden by law. Yes, you did not fulfill the condition of law, but it does not become illegal. That is the difference. So all these payments like bribing or payment to underworld or penalties for acts like smuggling, tax evasion, these are all forbidden acts. These would be disallowed, but where penalties for some normal mistakes which you may commit during the course of business, like breach of contract, not fulfilling some conditions given by the government because they are giving you some concession on subsidies, all this will be allowed as deduction. So this is all pertaining to our previous session. Let me just check if you have any further questions relating to this. Sir, if question is asked to compute total taxable income of individual HF, AOP, BO and donation is made by such person for scientific research, then it will not be allowed to such person. Why? Ishan, where it is given that where an individual HUF, AOP is giving donation for scientific research, it will not be allowed. It is allowed. Scientific research deduction is allowed to everyone. Why you had this doubt, I don't know. Ishan, beta, then you're not listening to me carefully. I said company for whom? Students tell me I've put the condition that the expense will be allowed only to company for whom. Which expense? Is it for scientific research? It is only for family planning. Priya, what do you want to be more cleared, beta? Tell me. Priya. So Ishan, beta, that condition is exclusively limited to family planning, as rightly answered by many students. I never extended that condition to any other expense like scientific research. Yes, Priya, please tell me, beta, what is the clarity that you require? Because for being able to solve anything, you need to first know the law. And that is what we are trying to study. Yes. Okay. So, Anuva, beta, now we'll have to wait because I cannot keep repeating the same things again. Let me proceed. Yes, Priya, we will be doing definitely. within the time frame that is there with us. Okay, so just give me a 1 minute break so that we can go to the next part. Just 1 minute. Okay, students. So now we are going to go to a very interesting part. Please be patient while studying this. Reason of being patient is these are slightly technical conditions. You need to be a bit more attentive. You need to be a bit more focused. And please keep your mind and everything open whenever you are looking at this. Oh, there are some very lengthy questions. Sir, have an inquiry related to residential status. But if you allow me, can I take this question later? Because let me first complete my point. Sir, in this head, undervaluation, overvaluation of opening closing stock are considered or not? Please understand one thing. Avinasha. See, if let us say your genuine value of stock is 100, whatever it is, opening or closing. If you are taking 110, that is your overvalue. Income tax law says we want correct value, that is 100. Now, if you have shown 110 in your P&L, accounting P&L, that has already obviously impacted your profit. So you will have to remove the effect from your profit by adjusting that 10 rupees. Same thing is, had it been undervaluation, let us say 100 rupees stock is reported by you at 85. So there is a 15 rupees undervaluation. Again, the law says we want to consider the proper value. So you adjust that 15 rupees. So answering your question, if there is any under or valuation done, you'll have to adjust the effect in this reconciliation. Asta beta, I hope I can answer your question later because it is not pertaining to our topic and we have a lengthy topic at hand. So kindly allow me that leverage. Okay. So coming to the point, students. Now, what is this restrictions and disallowance category? As you can see, till now, the screens that we were having were majorly having green color. Why? Because the expenses, when they are allowed to you as deduction, it is a benefit. Why it is a benefit? Because to that extent, your income will get reduced. Because the more you can claim expense, the lesser would be the profit, and obviously the lesser would be the tax, right? In this particular case, I have put it in green. But now we are going to study, like here you saw red. Why? Because it was not allowed as deduction. Now we are going to study those sections which are not allowing you the deduction, which are putting some restriction. ऐसे sections अभी हम पढ़ने वाले हैं पवन बेटा, जो आपको डिडक्शन अलाउ नहीं करने वाले. वो कहेंगे कि ये वाला डिडक्शन अलाउड नहीं है. आपने ऐसा ऐसा नहीं किया तो मैं आपको डिडक्शन नहीं दूंगा. सो इम्पैक्ट इज कि बिकॉज ऑफ दीज रेस्ट्रिक्शंस, बिकॉज ऑफ दीज strict conditions, your expenses may be disallowed. Disallowed means you will not consider that expense in your PGBP. Obviously, if that expense is not considered, your profits will be higher. You end up paying more tax. Hence, I have put these sections in the red. Now, first section, which is putting some restriction, is section 40 clause A. And what does this section say? This section simply says that you cannot take deduction of direct taxes. Now, today the major or the only direct tax is income tax. Earlier you had gift tax, you had wealth tax. All those are now not there. So if in your P&L debit, you have shown income tax paid, now it may be income tax paid, provision for income tax, whatever, but the expenses of income tax, 40 clause A says you cannot take deduction. Now again, it may happen that the employer is showing the income tax on the perquisite income of employee, again not allowed as deduction. So whatever is income tax, whatever is your direct tax, it is not allowed as deduction. First restriction. So the law says हम आपको इनकम टैक्स का डिडक्शन नहीं देंगे. इन अकाउंट्स यू नॉर्मली डेबिट इनकम टैक्स. आप वहां पे खर्चा दिखा रहे हो, आई विल नॉट अलाउ यू डिडक्शन. सो फर्स्ट पॉइंट, इनकम टैक्स इज disallowed always, no deduction. इनकम टैक्स का जो खर्चा है आप पीजीबीपी इनकम में उसे माइनस नहीं कर सकते. इन द सेंस आप उसे पेनल डेबिट नहीं कर सकते, हम उसका डिडक्शन नहीं देंगे. क्लियर? This was easy. This was like a full toss ball to start with. Now there will be Yorkers, there will be bouncers, but you all are seasoned players. You all are now players who have good experience in enters. You have now been studying taxation for around a month. So I'm sure these points you will be able to tackle well. Just be attentive. Keep all your senses alert. Now, in income tax, we have a condition of TDS. What is this condition of TDS? Please pay attention. The condition is that when I am making payment of my expense, like salary, like rent, like professional charges, like contractors' charges, for all these payments, which are my expense, the law has made a provision called as TDS, whereby I am supposed to not pay you the full amount. So let us say the rent payable by me to you is rupees 2 lakhs per month. And in the TDS chapter, that rent is covered in section 194I or 194M. For the time being, sections you need not remember. For the time being, it is not required. Just listen to me. So this expense which you are paying, like I gave example of rent of rupees 2 lakhs, is covered in 194I. That is the section for TDS on rent. It means the section says, boss, if there is any rent payment, rent expenditure, you have to deduct 10% of it. It means you will not pay to that person. I will not pay to you, in my example, entire 2 lakhs. I will deduct 10%, which is 20,000. So I will pay you 1,80,000. So what am I supposed to do is, for some expenses, not all, for those expenses on which TDS has to be done as per the TDS chapter, I will not make full payment. I will deduct that much amount. Now what I will do after deduction, I cannot keep it with me. I have to deduct that much amount from your payment and I have to give it to the government. So the logic is of TDS that when I'm making you payment, see, whatever payment I'm making you is my expense, but it is your income on which you have to pay tax. Now, you may or may not go and pay tax. So the law has provided for this mechanism whereby it is asking me, the payer, when you are making payment of this expense, which is expense for me, but income for you, I have to not give you the full money. From that, they have specified percentage, 10%, 5%, 1%, 2%. That much amount I will deduct, first step. So this I will be doing on daily basis. So every day when I'm making any of these payments or when I'm booking any of these expenses, I have to deduct the tax. And after this month is over, like this April will be over on 30th of April, I need to go and deposit the tax because this money is not for me. It is your tax, which the law has asked me to deduct at the time of payment itself. That is why it is tax deducted at source. So I'm your source of income. So when I'm making you this payment, I will deduct your tax and this tax I will go and deposit with the government. So as a payer, I am given two responsibilities. One, deducting that much tax. Two, depositing the tax. I hope this is clear up to this point. This is what the TDS chapter wants me to do. So when I'm running my business, every day when I am making expenses, either I'm paying these expenses or I'm simply booking these expenses. Booking these expenses means I'm noting down the expense, passing the entry of showing the expense in my books, which is called as booking the expense. So I need to deduct your tax, first step. Second step, month on month. After that month is over, during that month, whatever taxes I have deducted from all of you all on different payments, I have to go and deposit with the government. Fine. Now, all these are my expense under various names like rent, salary, professional charges. See, there are specific lists on which TDS is applicable. Not all expenses TDS is applicable. There is a list that you will study in the TDS chapter. Now here, what does PGBP chapter says? PGBP chapter under again section 40 clause A only. So here also it was 40 clause A for this. So that is why this is the main heading. Under this, both point A and B are covered. Under 40 clause A, income tax or direct tax which you have paid, no deduction, that is done. Under 40 clause A only. Now see, there are various subclauses, 2, 2A, 3. Those are subclauses. Again, we need not get into the subclauses. Understand the ideology. So under all these subclauses, what they are saying is, where your expenses are covered under a TDS, it means you are supposed to deduct, and after deducting, you are supposed to deposit. If I do not do any one of these things, that is, I have either not deducted or I have deducted, that is after deduction. I have deducted the amount, but I did not pay to the government. So when any of these defaults are done, I did not deduct the tax, or I deducted but I did not deposit it. What will happen? I will be disallowed that expense. Means, even though it is my valid expense, I cannot claim it in PGBP. So it is like a punishment given to me that if I am not deducting TDS, the law says I will not be allowed to take that deduction. Now, pay attention. What does the law says? The law says I should have deducted the TDS during the previous year, and I should have deposited the TDS before the due date of my return filing. Now, the due date of return filing is given under section 139 subsection 1, and these are the due dates for different assessees. I do not want to put you in the due dates right now. First, understand the essence. So what does the law says? If you have shown any expense, let us say we are talking about financial year 24-25, then I should have deducted the TDS wherever it is applicable. Anytime during the previous year, if I have deducted a TDS, PGBP head is fine. You should deduct the TDS anytime during the previous year. First condition. Second condition, where you have deducted TDS, either during the previous year itself or after the previous year is over, but before your filing of returns, you should deposit the TDS with the government. If you do both these things, PGBP is happy with you, no disallowance. You can claim your expense. But if you fail to do any one of these things, then PGBP head says, I will now disallow that expense. How? If it is a domestic expense, what do I mean by domestic expense? I have to make payment to a resident. Resident means ROR of India. And the payment is also to be made in India. So that is why I'm calling it as a domestic expense. Then 30% of my expense will be disallowed. But if it is a foreign expense, that is, I have to make payment to a non-resident, or I have to make payment to any person who is sitting outside India, then entire 100% of the expenses disallowed. Now I'll explain you pictorially what it means. So this is the P&L given in the sum. I'll call it as accounting P&L. Now in this, they have debited rent for the year 30 lakhs. They have debited professional fees for the year 5 lakhs. Now, firstly, what I do is I check whether these expenses are eligible as deduction under PGBP. For this, I apply those 4 golden rules. So I apply first for rent and for professional charges. Is it related to business? Yes, the rent is for my business premises. Professional charges I have paid to a consultant for taking consultancy relating to business. Condition 1 satisfied. Is it revenue nature? Yes, both are revenue, none of them is capital. Is it for the current year? Yes, both are 24-25 expense. And is any of these expense an offense? No, these are regular expense. So I satisfy all the 4 rules, all 4 conditions, so expenses are allowed. But in the adjustment, in the additional information, they have given you something. What is this something? They have said, Ki, this rent, obviously it is a domestic expense. You are supposed to pay this rent to a person whose property this is, who is a person in India. You have not deducted the TDS. So for rent, what they have said, you have not deducted TDS. Fine. Professional fees. This payment you are making to a foreigner because the consultant whom you hired is a foreigner. For this, you deducted the TDS, but you have not deposited the TDS. So let us say this is the additional information given. So for rent, they are saying you did not deduct the TDS. For professional fees, which is a foreign payment, because the professional is a person from outside India, you deducted the TDS, but you have not deposited the TDS. Now, as per 40 clause A, there is a problem. So as per golden rule, my both expenses are eligible. I can take the deduction in PGBP. But because of this, now what does PGBP says? Let us say I'm drawing the P&L as per PGBP. Now, students, please remember, we are not going to prepare P&L. We are going to do reconciliation, which is the most straightforward and easy format. But just for understanding what I'm trying to say, what the provision is trying to say, I'm showing it pictorially. Now, when you want to claim these expenses in your PGBP P&L, since I have not satisfied this condition, there will be some disallowance. What is this disallowance? Where it is a domestic expense, 30% of my expense is not allowed. So out of this, I cannot claim deduction of 30%. So if I'm making my PGBP P&L, I can claim deduction only of 70%. It means here I can show only 21 lakhs. I cannot show entire 30 lakhs because 30% of this domestic expense, they say you cannot claim as deduction. So for domestic expenses, if the condition of deduction and deposit, any condition is not satisfied, 30% of the expense will be not allowed as deduction. So instead of 30 lakhs, I can claim 21 lakhs. If it is a foreign expense, like in my example, professional fees, if I have not satisfied the condition of deduction and deposit, like in my case, I deducted, but I did not deposit, then entire amount is not allowed as deduction because entire 100% is disallowed. So in PGB P&L, I cannot take deduction of professional fees. This is what this condition means. I'm going very slow. I'm giving you a pictorial representation. Now tell me if anybody has a question in this point. Students, anybody, any question in this point? I've tried to keep it very simple, very raw, trying to avoid all technical things that we will add once you understand the basic. So tell me if this is clear or not, or if there is any question, what is your question? Yes, Rajveer. What is your name, beta? Mr. M.A. Priya beta, is it clear to you? Viplav. Okay. I'll explain that also, beta, please. Yes, others. Whoever, any doubt, any question, please put it across. Priyanshi beta, if I'm not wrong, I've already uploaded this beta. Last lecture, after the lecture, I've uploaded this beta. Others, please confirm if this is available in your downloads. Yes, Priyanshi, others are confirming it is there. Okay, fine. Rehana, resident is resident by any means, correct? So all means it will be covered. Soumya, I did explain that at the start. TDS is tax deducted at source. So when I'm making payment, I will not make full payment to you. I will deduct some amount from your payment. Your payment means the payment which I'm making to you, which is your income, and I will deposit it with the government. This is TDS, tax deducted at source. Yes, Bharat, you're right. Now I'll take one more example in this. Let us say my P&L also has one more expense of salary, 50 lakhs. Now for this salary expense, either they have not mentioned in the sum anything. So remember students, when nothing is mentioned in the sum, you presume that all these conditions are satisfied, that TDS has been deducted and deposited. But let us say, just for clarity, it is mentioned that for this salary, TDS was deducted on 31st March, that is the last day, and deposited on 30th of July, again, just within the time limit. So they have given dates. So first is they have said that TDS on salary was deducted on 31st March, which is the last day of the previous year. So we satisfied our first condition. You should have deducted it anytime during the previous year. So up to last day you should deduct. I have deducted. Further, I deposited this by 30th of July. Let us say my due date is 31st of July. So I have even deposited it within time. It means that I have satisfied all the conditions for TDS on salary. Now what will happen? Whenever I'm computing PGBP income, I can take full deduction of salary. So where condition is satisfied, the entire amount is allowed as deduction. Where any condition is not satisfied, that is either deduction is not done or either deposit is not done, in that particular case, if it is a domestic expense, I will be allowed only 70% because 30% will not be allowed. If it is a foreign payment, entire 100% will not be allowed. I hope I have made it clear to everyone, whoever had whatever doubts in this. Students, I hope I have made it very clear because many of y'all had put multiple doubts. I'm answering everyone. So I'm sure everybody, whatever are your doubts. Yes, Anubhav beta, you have TDS list. If you want, you can go to your module TDS chapter, you'll get the list. Yes, Kinari beta.
Good evening, sir.
Good evening, beta. Tell me.
Sir, my doubt was interest and penalty on late filing or late deposit of TDS. What would be done?
So it means I have deposited the TDS late, because of which they are levying interest and penalty, correct?
Yeah, correct.
So are you talking about what will happen of the amount of interest and penalty?
What would be the treatment in the
Yes,
income
of the
tax?
interest and penalty, na? Of the interest and penalty.
Yeah, of the interest
Right?
and penalty.
Now, students, just keep this point in mind. In the first point of this list, what was not allowed was income tax. Correct? TDS is also a form of income tax only. Now, when I'm saying what is not allowed is income tax, so even the interest and the penalty for income tax is not allowed. Now, if you understand this, then I will answer Kinari's question that if I have deposited the TDS late, obviously there will be interest, there will be penalty. Her question is, what will happen to the interest penalty means whether I can claim deduction. The answer is no because of the first point. So if any of the TDS is deposited late and there is interest penalty, you cannot claim deduction for that interest and penalty.
Can I ask a
Fine.
practical doubt again?
Yeah, please go ahead, Beda.
So then, when we make the balance sheet, where will this fall?
In balance sheet,
Yeah, in the I'm asking in the terms of accounting treatment.
I'm
What
talking
will
about
it?
accounts only. See, don't mix between accounts and PGBP. In accounts, it is already shown in the debit of your P&L. Your debit of P&L is
Correct.
showing
Yeah.
interest, correct?
Yes. Yes.
And penalty of this income tax, TDS, whatever, right? Which I'm saying here
Yes.
it is not allowed. So here only it is dash. Here you have shown, let us say it is 25,000. So it is debited your P&L and that is okay. P&L as per accounts, everything is okay because accounts has a different principle and logic. There you are showing it as an expense. Here, I don't allow you as an expense because of my specific restriction under 40 clause A. Correct, Beda?
Okay. Okay. Thank you.
Understood, na?
Yes. 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 I was having this doubt.
Because you are relating this with accounting balance sheet, but it has nothing, no connection with accounting, right?
Okay.
Yes, Priya, tell me, Beda. I've already answered this, but I've already shown it in P&L. Deduction will be 50 lakhs. Why you have a doubt? I don't understand. If you have satisfied the condition for salary, you have deducted in time, you have deposited in time, what will happen? I showed entire amount is allowed as deduction. So entire 50 lakhs will be allowed. I've already done that. Yes, Ishan, you are perfectly right. So now, what I'm going to tell you, please pay attention because this is where maybe I'm saying confusion may happen. And that is why I'm going very slow. I'm giving you a lot of space so that you can digest this. So if you have understood up to this point, now I come back to the computation. I've already explained that my computation of PGBP is in the reconciliation format. I'm just writing here so that I don't keep on switching the slides. Now, what is the format? You start with net profit as per accounting P&L. Now, in this P&L, there would be some net profit given. Let us say it is rupees 6 lakhs. So my starting point is 6 lakhs. Now, only for these three items or these four items, what we are talking about, these four items are already debited in your accounting P&L, right? What are these four items? Salary, 50 lakhs, rent, 30 lakhs, professional fees paid outside India, 5 lakhs, interest and penalty of income tax or of TDS, 25,000, and your net profit, which is debited, is 6 lakhs. Now, I need to find out PGBP income, and what is our method or format? It is the reconciliation format. Now, by applying the provisions of PGBP, what I'm just explaining, you found out that salary, first you applied 4 rules. Is it related to business? Is it current year? Is it revenue? Is it offense? You got the answer. You satisfy the 4 rules. First 3 answer is yes. Fourth answer is no. It means all 4 rules are satisfied. Salary is eligible for deduction. After that, you checked the additional information given for salary, and the additional information given for salary was relating to this TDS. And what was mentioned in this TDS for salary? It was mentioned that the TDS on salary is deducted on 31st March, which is the last day of the previous year, and also deposited by 30th July, which is within your time limit of filing returns. So you have satisfied all conditions. It means, like I showed you, as per PGBP, the salary is allowed as deduction. Now, please understand, I need to follow the reconciliation format. In reconciliation format, we have to either add or less to find out the final PGBP income. But what has to be added, what has to be subtracted? Only those items which is a difference between P&L and which is difference in PGBP. Means something in P&L, not in PGBP, or something not in P&L, but there in PGBP. So whatever is different between the two, only that has to be shown in reconciliation. Correct? Now, I just explained that it is debited in P&L, and as per PGBP, all provisions you check, firstly the four golden rules, then this condition of TDS, everything is satisfied. So even PGBP allows this as deduction. This is what we have concluded. Now, my question is, while solving the PGBP sum in this reconciliation format, what I have to do of this 50 lakhs? First, add. Second, less. Third is nothing. So either I will add, either I will subtract, or I will do nothing. You can give me answer as A, B, C. A is add, B is subtract, C is nothing. So it will be simple. You can simply say A, B, or C. Add A, subtract B, do nothing, C. Rajveer beta, please reconsider. Kinnari beta, please reconsider. Very good. Soumya, Smriti, Ishan, Astha. Others, please put in your answers, whether right or wrong, that is okay. Reconsider, Dhanush. Please understand, students, what is reconciliation? Whenever we have been doing reconciliation right from standard 11 till now, reconciliation is done only for those items which is different between the two set of books. If some item is same between the two set of books, why it will be in the reconciliation? Yes, Divya, right. Very good, Rajveer. Shailja, reconsider. Please understand the students, what is there in P&L? If it is also there in PGBP, why reconciliation? Correct, Anubhav. Kinnari, reconsider. Correct, Ananya. So what is there in both? Why reconciliation required? We do add less. That is, reconciliation means either add or less only for those items which is different between the two set of books. Either it is there in PGBP, not in P&L, or it is in P&L, not in PGBP. But where it is there in both, I will do nothing. So answer is for salary, I will do nothing in this reconciliation. I hope this is clear. Students, I hope this is clear. From this sum, the practical example which I am taking, when I will be doing reconciliation only for the first item salary, I will do nothing. Priya, please ask your question. I will unmute you. You raise your hand. Be specific in your question. I want you to cross question me instead of simply asking me to repeat, because it will be having no value addition. You raise your hand, I will unmute you. You ask me specific question, I will answer. Yes, students. So, while solving this sum in reconciliation, I will do nothing for salary. Coming to rent. In accounts, the P&L has shown 30 lakhs. I applied the 4 rules. Related to business, yes. Current year, yes. Revenue, yes. Is it offense? No. So I satisfied 4 rules, so it is eligible. But when I came to additional information and I checked the condition for TDS, I found that TDS was not deducted. So I get stuck up in the restrictions. And because of this restriction of TDS, I will have to pay some disallowance. Now I check whether this is a domestic expense or a foreign expense. If nothing is given in the sum, you always assume that the expenses are domestic. Now, since rent is a domestic expense and I have not satisfied this condition, the law says 30% will be disallowed. So I've given you example. If I have to make PGBP P&L, how much I will debit for rent? I will debit the 70% part, which is 21 lakhs. Because as per PGBP provisions, 30% is not allowed as deduction. Now, same question. Add less nothing. Now again you will say ABC, and now you will also specify the amount. So if add A amount, if less B amount, if nothing then simply C. Please give me with amounts. Anubhav. Very good, Astha. Very good, Smriti, Ishan. Priya, you have to reconsider. Anubhav. Good. I'm merging both your answers. Rajveer, reconsider. Good. Shelja. Ananya, reconsider. A add, B less, C nothing. Mohammed Farhan, I want A, B, C. That is add, less, nothing. You are repeating the provision. So you have mentioned amount, Farhan. Now mention amount with A, B और C. मैं इसे add करूंगा, less करूंगा या कुछ नहीं करूंगा. Where to add less? In my reconciliation. So when I'm preparing reconciliation, what I will be doing? Rajveer, amount. Farhan, you're right. Rajveer, amount. Priya. Now you are perfect, beta. Yes, Soumya, correct. I hope, Priya, so even your previous query is resolved after this. Superb. So, what I will be doing, students? In the add, I will write rent, TDS, not deducted. I'm writing the reason. And how much is disallowed? Out of 30 lakhs, 30% is disallowed. So 9 lakhs I'm adding. Chalo, professional fees. Apply the 4 rules first. Business, yes. Revenue, yes. Current year, yes. Offense, no. So I satisfy the 4 rules. I can proceed. I check TDS. As per TDS condition, I had deducted TDS, but I did not deposit. Now you will directly tell me ABC with amounts for professional fees. A is add, B is less, C is nothing. So ABC with amounts. Perfect, Ishan. Astha, perfect. Anubhav, reconsider. Atharva, I did not get from where you are getting this amount. My amount is 5 lakhs. Very good, Smriti. No, sorry, reconsider, Smriti. Yes, Priya, very good. Amount of professional fees is 5 lakhs, beta. Very good, Soumya. Selja, correct. Sunil, what is the amount? Rajveer, where did you get this amount? Divya, reconsider. Anubhav, correct. Sorry, Farhan, amount is wrong. Kinari, amount is wrong. My amount is 5 lakhs. Correct? Because of not depositing TDS. How much will be disallowed? I have already mentioned professional fees is a foreign payment. How much will be disallowed? 100%. So in PGBP, I cannot take any amount as deduction because nothing will be allowed. Entire 100% is not allowed. So add professional fees, TDS not deposited. Now the reason has changed and it is 5 lakhs into 100%. So entire 5 lakhs will be added. Please check. Whoever had this doubt or misunderstanding, please check. Now is it clear? Yes. Priya, this is the supreme realization. Excellent. You are perfectly right, Priya. This is the point I started with in the previous lecture. I repeated today. No problem. It may take time, but it is very important that you get your own realization. You remember Eureka. So now it is Eureka for you. Correct? Chalo then, students, let us take this example further. तो हम थोड़ा और प्रैक्टिकली इसको बढ़ा देते हैं सम को. ठीक है. अच्छा, now I'm not showing everything in PGP P&L. Now that you have to simply visualize. ठीक है. So one more item is already there, that is interest and penalty. I will directly give you the answer. क्या होगा? Interest penalty भी add में ही आएगा. So you have to add interest penalty. Why? Because it is for the late payment of income tax TDS. And since income tax is not allowed, the interest penalty on TDS is also not allowed. And entire 25,000 is added. Now, you have depreciation, which is 12 lakhs. And there is adjustment which says depreciation as per income tax is 9 lakhs. There is on the credit side rent from HP let out rupees 10 lakhs. There is interest on debentures rupees 3 lakhs. ठीक है? So these are more adjustments or more entries I have added. You have to tell me what I will do while computing PGBP income. I'll just add one more item on the credit side. Till then, you can consider these 3 new items which I've just included in this example. On the credit side, you have export incentives 2 lakhs. So I've added 3 new items on the credit side and 1 new item the debit side. This debit side item has this adjustment. Now, I give you all 2 minutes. You have to put in the chat what you'll do for all these 4 items. Excellent, students. So I will share the answers. You all can cross check, and where there is a doubt, you can raise your doubt. So first, depreciation. 3 lakhs is the difference because your account has debited 12 lakhs. As per income tax, we are getting 9 lakhs. Correct? What I will do? I will again add depreciation 3 lakhs. It is going in add. Right? Any doubts with this? So 3 lakhs add. Now, rent from HP, interest on debentures. Both these are not PGBP revenues. They are pertaining to some other heads. So now I'll put them in the less category by the name interest on debentures and rent from HP let out. So 3 lakhs is less for interest on debentures. 10 lakhs is less for rent from HP. Export incentives 2 lakhs. It is part of my business revenue. It is an indirect revenue from my business. It will also come in PGBP because PGBP covers indirect revenue. So I will do nothing for export revenue of 2 lakhs. So 2 lakhs export revenue, nothing to be done. Correct? Anybody? Any questions? So majority of you all have given answers correctly. 1, 2 small points here and there are different, but that is okay. Yes, Asta, you can do that also. So Asta is saying, sir, instead of taking the difference between the depreciation, can I say that I will add this entire 12 lakhs in my reconciliation and I'll subtract the entire 3 lakhs. You can do that also. So in the add, you write depreciation as per accounts 12 lakhs. In the less, you write depreciation as per income tax 9. That can also be done. Perfectly fine. Students, this is the practical version. And now since we have understood a major part of PGBP, now we can understand. What perquisite point you want, beta? Harsh. Rajveer, if it had been issued, why it would be on the credit side, beta? It should be on the debit side, na? Harsh, I did not get your point. Perquisites, it is not perquisites. It is the income tax which the employer is paying on the perquisite income of employee. So in salary chapter, you would have studied that employer is giving perquisites to employee. And it is also saying that whatever is the tax, income tax of employee, that will come on that perquisite income, that also the employer will pay. So employer is giving you perquisites, plus he is also bearing your income tax on that perquisite. That is what is the point, beta, Harsh. Understood? Arun, but I'll answer your point. Just give me a while. Let me not mix too many things. Otherwise, we will miss the tempo that we have created. So students, I hope up till this point, now things are getting clearer. Yes, Harsh, you're right. I hope students, now things are getting clearer, right? And this, let me tell you, is one of the most trickiest, most technical provision of PGBP head. Right? Now, We talked about all the reds. Reds are where the law says you will not get deduction. Now let me talk something favorable, that is the greens. Green is favoring us. Now in the same point of TDS, you have green also. What is this green? First point number 3. This point may be only a theoretical point, may not be required practically. 4th will be required practically also. Please pay attention. Now what is third point saying? Third point is saying that we were very harsh here. How we were harsh? We said that if you do not deduct TDS, I will disallow. But this is very harsh. So let me give you some relaxation. Now what does point 3 says? Point 3 says you have not complied with the first condition, that is you have not deducted TDS. So when I'm making payment to you, let us say I'm making payment to you of interest. I've taken loan from you on which I am paying you interest. Again, on interest, I should deduct TDS, but I forgot to deduct TDS. So I've not complied with first point. However, I did not deduct your TDS, but you are honest. You paid your income tax that you are getting on this interest income. So whatever interest I'm paying to you, you are showing that interest income in your calculation of your income tax. You are showing that interest income. Whatever tax is coming, you are paying that tax. Now comes the essence of this condition. What is the essence? The essence is that I am asked to deduct your TDS. Why am I asked to deduct your TDS? So that whatever income you are earning from me, the tax on that income should go to the government. So the government has given me the responsibility of TDS. And if I don't fulfill this responsibility, I'm punished by not giving me the deduction of that particular expense, either 30% or 100%. But what is the purpose of this condition? The purpose of this condition is that I should deduct and deposit your tax. Now, if I fail to do this, but you are honest, and even though I have not deducted your TDS because I failed to do that, I forgot to do that, but you yourself disclose the income in your P&L and you also paid the tax. In that particular case, the law should not penalize me. That is what point 3 says. So what is point 3 saying? I'm just rubbing out so that you can read. It says, assessee did not comply with point 1 by not deducting the TDS. So I forgot to deduct your TDS, but the pay, that is you, are honest. You have paid tax on this income and submitted the proof to me. Now, I will be eligible for the deduction. But remember one thing, you will not be giving me the proof immediately. You will giving me after some time, that is after you have also filed your returns, you have paid all the taxes. By that time, I have also filed my return because our due dates will be nearby or maybe same. So when I am filing my returns, by that time you have not filed your return, so I cannot ask for this proof. So what I will do is, when I am filing my return now, I am first disallowing that expense. Why? Because I failed to deduct TDS. Later on, when I get the proof from you, then in the next year, I will allow this expense, that is, I will take deduction. So what this point means when it says I am eligible for deduction, it means in this year, I disallow because I made a mistake by not deducting your TDS. And in the next year, when I'm again doing computation of next year, you have given me the proof that, okay, you deposited the tax completely to the government. So whatever amount I had disallowed, I will now take the deduction in the next year. This is what the relaxation given in point number 3. Correct? Similar is the relaxation in point number 4. Now in my point number 3, what had happened? I had not deducted the TDS only. In point number 4, I deducted the TDS, but I did not deposit. So now in point number 4, we are talking about the second mistake. So I deducted your TDS. That is, instead of paying you 2 lakhs rent, I paid you 1,80,000. So I deducted the 20,000 TDS, but I did not deposit with the government. Again, what has happened? You disallowed. You means the law PGP disallowed me the expense. Now, what I do is this TDS, which I should have deposited, I deposit late in some subsequent year. After 2 years, I go and deposit this TDS. Now, again, what has happened? In this current year, 24-25, when I'm doing the computation of this 24-25 and now I'm filing my returns, since I have not deposited the TDS, I will disallow the expense. See, I'm assuming we are talking about all domestic expenses, so I'm disallowing the expense. After 2 years, when I go and deposit this TDS, so I have now complied with the condition, I will now again take the deduction. So I'll take the deduction of this amount of expense, which was disallowed 2 years back because I had not deposited the TDS. So in both these points, what is the relaxation given? That today you are disallowing your expense because one of the condition is not satisfied. But later on, in this case, next year, when you get the proof that the opposite person has paid the tax, you take the deduction. Or in this case, the TDS which you had deposited, which you had not deposited, whenever in future you go and deposit the TDS, you take the deduction. So the point or the condition is that in this year, you are not claiming the deduction because you have not satisfied the condition. But in the future, whenever you satisfy this condition, you go and take the deduction. I hope this point is also clear. So effectively what we are doing, in this year, what I have disallowed, in the subsequent year, I will take that deduction. Is this fine with all? Anybody, any doubts with this? Perfect. So I'm repeating what Ishan has written, that it is disallowed in the year of default, and in the year when I am correcting the default, that is why I'm depositing the TDS, it is allowed. Perfect. Clear? Now, because of this relaxation, yes, Asta Beda. Now, because of this relaxation, what is happening? I come back to my golden rule number 3. What was my golden rule number 3? I should take deduction only of current year expense. Now, I am talking about rent of financial year 2022-23. What happened of this rent? In that year, I deducted the TDS, but I did not deposit the TDS. Let us say the rent was rupees 10 lakhs in that year. Now, what did the law do? PGP said, okay, since you have not deposited the TDS, 30% of this, that is 3 lakhs, was disallowed in that year. Fine. But in the current year, that is financial year 24-25, for which we are doing the computation, I deposited this outstanding TDS. So what will happen? they will say, okay, now you have satisfied the condition. So now this 3 lakhs, which was disallowed here, you now take deduction so that it is now allowed. This is what we just studied in that point number 4. So that we just understood. Now what is happening? Because of that relaxation, I am breaching this third rule. What was my third rule? You should take deduction only of current year. But now what is happening? For 24-25 computation, I am taking deduction of expense of 22-23 because this amount of 3 lakhs of rent was my expense pertaining to the year 22-23, which at that time I disallowed because of these conditions. And again, as per the same conditions, I am taking that deduction now. So because of this point, it is becoming exception. Key point. What is that? Expenses are pertaining to earlier years. So in my example, expenditure is of 22-23, which were disallowed then, yes, because I did not deposit the TDS, but are allowed now in 24-25 when I have deposited the TDS. So what is happening in 24-25? The same law is allowing me the deduction of 22-23. So this relaxation given in 40 clause A is becoming an exception to our rule of current year expense. But fine, the law is giving me a benefit. That year's disallowance is now allowed in this year, obviously because I complied with the law in this year. So law is correct. So this point becomes one of our exceptions to the condition that you should take deduction only of current year, but this point becomes an exception. Is this clear? Students, is this clear? Which allowance, Anubhav, beta? Acha, allowance, disallowance, allowance. Yes, so you are saying company forgot to deduct TDS, but anyhow deposits the amount the same year to avoid disallowance. Can it happen that he will be given allowance? See, if you have not deducted TDS, so what I'm understanding, you did not deduct TDS, but you go and deposit the amount. Now, whether you will be allowed the deduction. See, understand one thing, but a deduction of TDS is only a book entry. So you can always, if you are depositing the TDS within the time limit, you can always correct the book entry. So I understand as per your question, whatever I have understood, you will get the deduction, right? Okay. Now coming to simpler sections. So now we are still in the section relating to disallowance. Now it is another section which is providing for disallowance. Now this is a very simple section, nothing technical, nothing difficult. What it says, again, we are talking about your expense. Now the point is, the expense that we are discussing is an expense where you have done that transaction with a specified person. Now, who is a specified person? A specified person is your relative or any of your business associate. Now, if you have done any business transaction with any of these specified persons, which means your relatives or your business associates, the law says, I will give you deduction for this expense. I don't have a problem. You can do business with your relatives. The only condition is, please ensure that your expenditure is within the fair market value. In other words, you are not showing expense which is over and above the fair market value. So I'll give you an example. You have shown that the printing and stationery that is coming to your firm, which is rupees 5 lakhs, is purchased from a shop belonging to your relative. So you have debited in your P&L printing and stationery 5 lakhs, which is purchased from a shop belonging to your relative. Second example, you have paid contract charges for some repair work, rupees 10 lakhs. And again, this contract is given to your own associate firm. Now, for both these expenses, first check the four golden rules. That is the first thing. Are these expenses of business? Yes. Current year? Yes. Revenue? Yes. Offense? No. Okay, allowed. Now, the only thing to be tested is, since these expenses are done with a specified person, who may be either your relative or any of your associates, these expenses should be within the fair market value limit. So in my adjustment, they have given me fair market value of these expenses. So the printing and stationery fair market value is 4.7 lakhs. And the contract charges fair market value is 11 lakhs. Now, what does the law says? The law says that what I will disallow is only the excess portion. Excess means where you have claimed a higher expense. Where you have claimed a lower expense, we don't have a problem. But where you are claiming higher expense, more than the fair market value, I will disallow the excess portion. So what is the calculation of the disallowance amount? It is your expenditure which you have debited in your P&L account minus the fair market value. Obviously, this becomes the excess amount. Correct? So in this example, you have to tell me what will be disallowed. You have to give me the name and the amount. So you have to tell me what will be disallowed, the name and the amount. Very good. So Kinnari, perfect. Janvi, perfect. Smriti, perfect. Divya, sorry, you have to reconsider. Astha, correct. Kinnari, correct. Shan, perfect. Anubhav, perfect. No, Rehana, not correct. Divya, correct. Rajveer, where are you getting this amount? I'm not understanding. Kirti, sorry. So the answer is my printing and stationery fair market value is 4.7, but the amount debited is 5 lakhs. So I have claimed excess amount for printing stationery. So in my reconciliation, if I go back here to the previous sums reconciliation, in the add portion, I will write printing and stationery 5 lakhs minus 4.7 lakhs. So 30,000 will be added. So 30,000 disallowed means 30,000 will be added. Correct now? Soumya, 30,000 printing stationery will be disallowed, added. Nothing will be done for contract. Students, nothing will be done for contract. So firstly, in my answer, what I will do, 30,000 for printing stationery difference I will add. Disallowed means I have to add. Nothing will be done for contract. Why? Because in case of contract, my amount debited is 10 lakhs, fair market value is 11. So I have not claimed excess expense. In fact, I have claimed lower expense. And the law does not have problem with claiming lower expense. So where I'm claiming lower expense, they have no problem. I hope this is clear. So nothing is done for contract charges. Only 30,000 is disallowed, that is added because of printing and stationery difference. This is in very simple words 48.2. Now, who are covered in relatives? Who are covered in associates? The list is given in 48.2 that we can read for theory, which is just the names, who all relatives are covered, who all associates are covered. But this is what is the law saying. Correct? Now moving ahead. 48.9, again a very simple provision. Now, in our P&L, we have to debit, that is, we have to incur in our business different types of employee welfare expenses. Like we have to deposit provident fund, we have to deposit in ESIC, we have to deposit in so many different funds relating to the welfare of employees. And these are all compulsory because there are different laws for this. Now, you would have studied in salaries that these funds may be approved or unapproved. These funds may be recognized or unrecognized. Now, PGBP says if you have made payment to unapproved, like unapproved superannuation fund or unrecognized provident fund, unrecognized some ESIC fund. So where your payment is made to any unapproved fund or unrecognized funds, it will be disallowed. In other words, it will be allowed only when the payment is made to an approved fund or a recognized fund. So wherever in the P&L they have given unrecognized or they have given unapproved, you have to disallow. And disallow will mean add because it is debited to P&L and it is not going to come in PGBP because you have not satisfied this condition. So what we will do now, we all know in reconciliation, this will be added. Correct? Another condition, 48.3, again a simple one, nothing technical, just be patient. See, Astha, payment done but not compulsory as per law. Let us say some welfare scheme is not made compulsory to you, but still you want to do that welfare for the employee. So first, is it fitting in the 4 conditions? Is it related to business? Yes. Not compulsory, but you are doing for employee only. So related to business, yes. Revenue, yes. Current year, yes. Is it offense? No. So you are eligible for the deduction. Even if it is not compulsory, you have satisfied all the 4 conditions. Now, this condition you have to satisfy anyways, whether compulsory or not compulsory, that the funds have to be approved, the funds have to be recognized. So if the funds are unrecognized, no deduction. Yes, Soumya. So if the funds are unrecognized, entire amount is disallowed. Ishan, Bada, you have to answer me this. You tell me what will happen. Apply logic, na? If you have raised some query, apply the logic. You know the law now. What the law says, you know very well now. Apply the logic to your question. Obviously, correct. You're right. Converted to recognize, allowed. Fine. Now coming to the next condition. Now this condition, let me give you the logic first, is introduced so that people should not show bogus expenses in their P&L. Now what is a bogus expense? A bogus expense is an expense where you have actually not incurred that expense. You have actually not paid that expense. It is not a real expense, but just to reduce your profit so that you have to pay less tax, you are showing bogus expenses. Now, if anybody has to pass a journal entry for bogus expense, what the person will do? He will write expenses debit to cash. Simple. Or he will make a bearer check and he himself will go to the bank and withdraw that money so that there is some entry coming in bank through a bearer check. Now, when people started doing this type of all misdeeds and the government and the income tax department started identifying this particular provision was inserted. Now, what this particular provision says that where your expense against a single bill in a day, that is one transaction, exceeds rupees 10,000. So they have put a criteria. So for small expenses, this condition is not applicable, but for substantial expenses, that is in a day, a single transaction is exceeding 10,000, then we will allow you deduction only if that transaction is done, that is the payment is made by using an account paid check. So bearer check not allowed, even cross check not allowed. It has to be an account paid check or an account paid draft. Or now, since we have these online electronic modes, you can use any of the prescribed electronic modes to make payment like credit card, debit card, net banking, IMPS, NEFT, RTGS, UPI, BEAM, etc. So the criteria is if there is any expense in a single day exceeding 10,000, that transaction of expense should be settled, that is payment should be made only by account pay check or draft or by any of the approved online mediums. Then you can claim deduction. If let us say I am showing an expense, if today I have spent on traveling rupees 18,000 and I've shown that the payment is made in cash, it will not be allowed. Full 18,000 will not be allowed. So whenever the expense exceeding 10, payment has to be made by any of these mediums. Otherwise, it will be fully disallowed. Now, there is one small relaxation for transport charges. Now, we all know transport charges means freight. So where you are making payment of freight, this limit of 10,000 is raised to 35,000. So only for freight, while applying this condition, you have to check the limit of 35,000. So let us say if in your books, you have shown freight expense of 30,000 in a day, and that payment you have made in cash, it will be allowed. You have shown expense of 32,000, payment made in cash, allowed. Expense shown of 35,000, payment made by bearer check, allowed. But 35,100 payment is made by cross check also not allowed. Entire amount is disallowed. So where your expenditure of a single transaction in a day exceeds the limit given for transport, it is 35,000. For other expenses, it is 10,000. The payment has to be compulsorily made by one of these approved mediums. Then it will be allowed. If not, the entire amount, don't deduct that 10,000 or 35,000. There is only a criteria set. The entire amount will be disallowed. See, Kinnari Beda, you are saying what will be if any expense is genuine, still paid in cash. They are saying, sorry, even if it is genuine, see, how will I come to know whether any expense is genuine or non-genuine? That is why I have given this criteria. And see, 10,000 is a huge amount. So if you are making payment to anyone in 10,000, you also just imagine, will you give cash? Nowadays, in fact, post-COVID, we are so much used to this online payment, QR code scanning payment, that even 10 rupees, 50 rupees, 20 rupees, 100 rupees, we are making payment online. So I don't think about 10,000 for one transaction, anybody today will be giving cash. But still answering your question, whether it is genuine or not, I don't have any idea, or I don't have any means to check it. I've given this criteria. You have to follow this. Yes, they have given some exceptions. Exceptions means this rule or this restriction, I should say, will not apply to some payments. So these payments, irrespective of the amount, will always be allowed. So now the names which I'm going to read, you make payment of lakhs of rupees in cash, you will be allowed. What is this? You are making payment to government. Now government for what? For indirect taxes. Direct taxes we already studied is not allowed as deduction. Indirect taxes, GST, customs duty, allowed. Now let me first explain you about indirect taxes. First, apply 4 rules. Are these indirect taxes related to business? Yes. Is it current year? Yes. Revenue? Yes. Is it offense? No. So it is satisfying all the 4 conditions? Yes. Is it fitting in any of the restrictions? No. So it is fully allowed as deduction. Now, what if you pay any of this GST or customs duty late? So you also have to pay interest. At times you have to pay late fees. For some small mistakes, you have to pay penalty. Whether you will be allowed deduction for this, answer is yes. Same logic. If indirect taxes are allowed, even their interest late fee penalty is allowed. Only where the penalty is where you are trying to evade the tax. So you are trying to evade tax, you were caught, and for that tax evasion, I am levying penalty. It will be disallowed. Otherwise, indirect taxes are allowed. They satisfy the 4 conditions. Also, they are not fitting in the restrictions, so it is allowed. Right? And also importantly, for this rule, it is an exception. So even if you are making payment of this indirect tax, which may be in lakhs of rupees, by cash, by bearer check, it will be allowed. Second exception to this rule is where your expenses is interest and you are paying this interest to bank or LIC or some NBFC from whom you have taken the loan. This interest, even if paid in cash, will be allowed as deduction. Sir, for late filing, late fees allowed, but purposefully showing less sales and penalty later on not allowed. Correct, but because when you are showing less sales, it is an offense because you're trying to evade tax. You're right. Okay. So first exception where this rule is not applicable is government payments. Second, payment to banks. Third, where your payment becomes due on some public holiday or the day when the banks are on strike. So you have no choice. But again, I will say now this point will become redundant very soon because if banks are on strike, you can still make online payment because online is working on all days. But for the time being, this exception is there. Most important exception is this, where you have made payment for any natural produce like some agricultural produce, forest produce, animal husbandry, and this is paid directly to the grower cultivator. So for example, I am Amul, which makes dairy products. So for me, I require one of the animal products, that is milk. And this I am purchasing directly from the person who is the cultivator or grower, that is directly from the person who is maintaining the cattle. So when Amul is purchasing milk directly from the farmers who are maintaining the cattle, again, whatever payment Amul makes to them, which may be in lakhs of rupees, even though it is in cash, even though it may be by bearer check, it will be allowed. So this is another exception to this particular condition or rule. Is this clear to all? Let us take one more restriction and we will close because doing too much in one day can be overdose. Then after this, only one exception is one restriction is left, but it is slightly technical. We'll take it in the next class. We'll complete with this. So at least we'll be completing with 90% of this today. So what is the next restriction? Now we are talking about the expenses of gratuity. Now there are two possibilities. First, your employee is retiring in the current year itself. Now when he is retiring in the current year itself, your gratuity is a current year expense. If it is a current year expense, whether it is paid, outstanding, you are showing provision, makes no difference. It will be allowed. Why? Because it is a current year expense. All 4 conditions are satisfied. But where your employee will be retiring in future, and today you are creating a provision as per your accounting standards. Please understand, the employee will be retiring somewhere after 5 years, 10 years, 15 years. But because accounting standard requires, hence you are creating a provision. Now what happens? This becomes a future expense which you are showing now. Now if any future expense you are showing today, you are breaching my third condition. Third condition was expenses should be of current year. So the rule given is it will be disallowed. However, if you remember over there itself, we saw an exception that if you satisfy the conditions of 40A7, we will allow it. What is this condition? So 40A7 says where you have created a provision for gratuity. Why provision? Because you are going to pay it in future, and that amount you deposit in approved gratuity fund. So whatever provision you have created for a future gratuity, because the employee will be retiring in future, so it is not your expense of this year. For this future expense, you are creating a provision as per accounting standard, perfect. And most important, this you go and deposit in approved gratuity fund. Again, since this is a welfare fund of the employee, again the condition of approved comes here. So if you have actually deposited this money in approved gratuity fund, I will give you deduction. Students, I hope you are understanding. Is this clear to all? Yes, ask Sabina. So see, I just opened the module. Now I'm sure when you read this format, you will understand this. So what is this format? We start with the net profit and loss as per accounting P&L, and we add those expenses which are debited in P&L but not allowed in as deduction in PGBP. And now here you'll understand what they have added, because by now you know the major provisions, right? So let me just run through this. So first, add back the depreciation. This is I took this example that your P&L depreciation is 20 lakhs, accounting depreciation is 9 lakh. One option is you show the difference, or I don't remember who suggested, but somebody suggested we can do one thing. We can show firstly the entire depreciation as per books, that is entire 12 lakhs in my example in add, and then in less, you can again show the entire depreciation as per income tax. So this would be simple. You need not worry about taking the difference. So entire depreciation of P&L you debit, what is debited you add, and whatever is given in the adjustment as per income tax you less. Simple, correct? Then next, income tax, which is disallowed, so you have to compulsorily add the amount. Now when it is income tax, it may be paid, it may be outstanding, it may be provision, it may be the tax amount or the interest or penalty. Then this is this condition we just studied of TDS. So 30% of sum which is payable to resident on which tax is not deducted at source or has not been deposited on or before the due date after the deduction. Correct? So how much you'll add? If it is to a resident, that is a domestic payment, 30%, otherwise 100%. Right? Again, here the relaxation point is given. The same is allowable in the future year when you deposit this tax. So whenever you deposit this tax, that year you can claim the deduction. Okay. Next, this again we discussed. Any expenditure incurred in respect of which payment is made for goods, service, facilities to a related person, to the extent the same is excessive. Excessive as compared to what? The FMV. So the difference will be added. Then the next point, any expense incurred for what? For payment which is exceeding 10,000 in a day, and it is made otherwise than by way of account, paycheck, draft, TCS, etc., etc., you will disallow the entire amount. Then this point I'm not explaining because this is the last restriction which is yet to be studied. This and this both are part of the last restriction. So I'm just keeping it aside because we have not studied. Then what you'll add back? Personal expenses. Why? Because out of my 4 conditions, the first condition itself is not satisfied, that it is not business. Then what will be disallowed? Capital expenses, again, it is not satisfying one of my conditions. Obviously, there are exceptions. You have to keep in mind the exceptions. Same, repairs of capital expenditure, capital nature not allowed. Amortization of preliminary expenses. Now you will say, sir, this was allowed. Yes, this is allowed. Then why they are adding back? Please understand, what they are trying to explain in this is, in your P&L, entire preliminary expenses is debited. But we studied, we will allow preliminary expenses, but how much? 1/5. So if 1/5 is allowed, remaining 4/5, which is the excess amount debited to your P&L, that you have to disallow. So what they are saying, how much you will add, you will add back the 4/5 amount. You are allowed only 1/5. So the remaining 4/5, which is debited to P&L, is excess. Disallow, add it. Family planning will not be allowed to whom? To persons other than company. So if P&L is of individual, HUF, AOP, BOI, you will add back the entire family planning. But if it is of company, you will do nothing. You will do nothing, right? Again, fees or penalty paid for infringement or breach of law. This is what? This is the penalties which is for offense, which will be added. However, penalty in the nature of damages, delay, etc. are allowable. So this you will not add. All expenses related to income which is not taxable under this head. This was our very first point. Expenses relating to HP head, expenses relating to other sources head, which are already debited in P&L, we have to add. And again, this point, this is pending in the next restriction. So we are keeping it aside. You can, for the time being. So see the whole list. Now you are able to understand 90% of it, right? Is this clear to you all, students? Similarly, in the less, what you will deduct? Depreciation as per income tax, because you have added entire depreciation as per accounts. Next, now this 30% expense, this is what? This is expense of past year when it was disallowed. Why? Because you did not deposit the TDS. Then it was disallowed, this 30%. Now in this current year, you have deposited that old TDS. So now that amount of 30% which was disallowed will now be allowed. So now I will be subtracting it. Correct? Same is for other expenses which was disallowed then. Now it will be allowed. Next, incomes credited in P&L but not taxable under the head PGBP. Why? Because they belong to other heads like dividends, agriculture, interest on securities, profit on sale of asset, rent from house property, winnings, gift, income tax refund, interest on income tax refund. All these will be subtracted. Students, I hope now this format is making a lot of sense. Now this format is much, much clearer to you. Is this fine? Asta beta, body corporate only limited up to company are eligible. Even LLP may be body corporate, not allowed. Correct? So that's it all from my side. I'm sure now what was a Ravan of 10 heads has now become a simple, may not be an easy thing, but still it is something which you can fight. Now this demon has come within your prowess, and now you can definitely handle it, fight it out, and win it. So today we have completed 90%. As you can see, I read out majority of this. I left purposefully few which we are yet to consider. Asta beta, please you put me the query because it will take some time to understand your entire facts. So, or you just do one thing, repaste your query here, please. Kinar is asking, sir, if you could please give some mental exercise. See, the mental exercise is only that you have to repeat by reading this provision again and again. Otherwise, it will be not so easy, because today you are finding it easy because you are answering along with me. Asta beta, if you want me to answer, please repaste your query. Soumya, sir, if any payment made in cash less than 10,000, then allowed. No question. Below 10,000, the restriction of 40A3 does not apply. 40A3 applies only when payment exceeds 10,000. Correct? Sir, are approved gratuity fund similar to approved superannuation fund? Yes, correct. Asa beta, if you have a doubt, please paste your query so that I can answer it right away. Sir, if private employer or government employer sends its employee outside India for employment purpose, then 182 days condition only applicable. See, beta, there are some exceptions to the 60 days condition. Now we have to check whether this particular point is an exception to the 60-day condition. What I recall, if I have to say, a person leaving India for the purpose of employment outside India. Yes. So that is an exception. Now the point is you have to establish that whether the person is leaving India for the purpose of employment outside India. If the answer is yes, then the 60-day condition will not apply. You have to follow 182-day condition. Yes. So my answer is yes to your query, beta. Fine. Excellent. So with this, we have completed a major part. I'm not saying entire PGBP is complete. We have to still read the details of each of these expense from the module. But now, once you start reading them, you'll find them much, much manageable. So I request that please come read with all the provisions of PGBP in the next class so that we can conclude this topic effectively, right? Sir, if purchase of goods in India for export, collection of news, etc. provisions, how will applicable to NOR? Sorry, but I did not get your question itself. Purchase of goods in India for export. Okay, that is one point. I understand this is one point. Second is collection of news, etc. provisions. How will applicable to NOR? But for this, you should first read section 9 because section 9 deals with what will fall in royalty. They have defined royalty. And I think your question or your doubt is linked to that particular point. There is a specific conditions given for certain specific items of income that when they shall be deemed to be accrue or arise in India. So beta, you have to first understand those conditions given in section 9 explanation. Then I think answering these questions will be easier for you. Kinnari sir, political party donation allowed? No beta, because it is not related to business. You will get deduction, but not in PGBP, but in chapter 6A, that is deduction from totally, but not in PGBP. Fine. So with this, students, we close today's session. It was great fun. We studied the most technical part of your income tax law when we dealt with those restrictive sections. And I'm sure by now your doubts are much cleared. Yes, Aparna.
Yeah, sir, Aparna, that I want to clarify to the students. See,
Oh,
I have
sorry.
announced.
Yes.
Yeah, I have announced that this program, which is scheduled for 25th of April from 3 to 4 p.m., there will be no class for auditing. Class for auditing is rescheduled for another day on Saturday, I think. So there will be no clashing. So students are advised to attend that program, right?
Okay. Yeah. Okay, Aparna, thank you.
Yeah.
So thank you, students. Let us catch up. Thank you. Good night. Yes, sir. Over. Thank you very much.